It is another interesting edition of the Market Review where we discuss key developments in the financial and capital market as it affects the economy. Our focus today will be on assessing the 2022 corporate bonds issuance in the Nigerian capital markets. And my guest is Mr. Oladipo Ajayi, the head of Fixed Income Desk, Chapel Hill, Denham. Nice to have you once again on the program.
Good morning. Thank you once again for having me around.
Yes, thank you very much. And to our viewers, before we begin the conversation, let us give you a wrap of some major market stories from last week. The governor of Edo State, Mr. Ottoabasi, has called on Nigeria to be strategic and invest in the oil palm industry to diversify its foreign exchange sources and boost socioeconomic activities. He disclosed this as the keynote speaker at the 26th annual summit of the Chartered Institute of Stockbrokers in Benin, Edo State. Also last week, the Lagos Free Zone PLC listed its 25 billion SPV Series 2 infrastructure bond at the Nigeria Exchange Limited and FMDQ Securities Exchange, respectively. According to the CEO of LFZ PLC, Mr. Dinesh Rathi, the Nigerian capital market has served as a significant pillar of infrastructure financing and industrialization in the country. Those were some of the key market stories from last week. If you're joining us, it is the Market Review Show, and our conversation today is on assessing the 2022 corporate bonds issuance in the Nigerian capital market. My guest is Mr. Oladipo Ajayi, head of Fixed Income Desk, Chapel Hill, Denham. So let's first begin, Mr. Oladipo, with the assessment of corporate bonds issuance in half year 2022. According to ProShare analysts, the first half of the year 2022 witnessed bonds issuance from corporates worth 246.28 billion naira to improve their balance sheet and scale up operations. What really struck me more was that Dangote Group led the whole chart by raising the largest corporate bond in the history of Nigerian capital market worth 116 billion naira. For you, what would be your analysis for first half of the year 2022?
Yeah, thank you very much once again for having me around. For me, the first year of 2022, I feel that it's the best year for anyone that actually wants to raise debt in the markets. And coming into 2022, we clamored that there will likely be an uptick in yield, and the best guys should actually go into the market very early so as to raise whatever they want to do. And we saw actually how that affected the Nigerian government as well, because we didn't do the necessary on time. So more reason why we had to suspend the issuance of the Eurobond, because immediately Fed started hiking rates, it impacted pricing, and we were put at disadvantage. So also, I'm actually not surprised with what we saw at the H1 of this year, because we actually expect every good corporates or organizations that actually needs debt instruments to actually come to the market and lead off in the first half, so as to be able to raise the money in good time and be able to capitalize on the low yield environment, and that's exactly what we saw. And also when we look at Dangote himself, we understood the reason why Dangote is actually trying to actually raise funds, because we know that we are at the tail end of the completion of the infrastructures that's currently going on. And at this particular point in time, he needed funds to actually complete the construction. And as a result of that, he actually made a good call to actually come to the market before the MPC starts making policy decisions around that.
Yeah. So I mean, very clear. We had this conversation, and you were very clear that this was the best time. And in our news, of course, reportage looking at last week, you heard the LFZ CEO talking about the fact that the debt capital market is supporting in the area of infrastructure financing and industrialization. So when you look at the structure of the markets currently, is it attractive as expected? Is it creating that enabling environment? Because like you rightly said, the federal government, over time, it has always been cutting out the private sector, but now we're seeing a very good uptick with corporate bonds issuance. Is it now attractive? Is it now creating an enabler for more corporate bonds issuance?
Yeah, I think somehow we still need to give kudos to the federal government for what they've been doing for a long time. Because in as much as they actually want to borrow from the local market, they also consider the corporate organizations. And we've heard the Minister of Finance also mentioned that time without knowing that one of the reasons why they decided to actually move borrowing offshore is just to actually create an environment for corporate organizations that also need to actually raise from the local market. And I think that's one of the reasons why we've able to see a lot of people come to the market and take advantage of the level of liquidity in the market. And for me, I think the market is still very much open, but just that you pay a premium for coming to the market late at this particular point in time. It simply means that an instrument that could have easily been issued in January for like 11 half, you will have to actually pay an additional 250 basis points. So, because for anybody to actually look in your direction as you speak, you have to pay close to 14%. And also consider the fact that as we speak currently now, corporate issuance is their disadvantage when you compare to the government, to the sovereigns. And one of the reasons why I said they are disadvantaged is because of the introduction of the withholding tax on corporate, the income of corporate bonds. So a lot of people, when you actually want to invest in corporate fund, you first of all discount the 10% you actually pay for withholding tax, and it's at that point that you start comparing with the available sovereign instruments, and also you are trying to look at the liquidity risk, credit risk, and all the factors before you make your decision. So, and that's one of the reasons I said earlier on that those that came to the market early enough in the year, they actually paid.
Yeah, quite apt to understand. You know, anytime you just want to issue, you just have to continue to engage the market effectively and understand the dynamics. Now, there's another interesting development where subnationals are leveraging special purpose vehicles to issue bonds in the debt capital markets. I remember last year when we attended the NGX inaugural capital market conference, Governor Abasiekong said the market needs to be even enabling and attractive to support states to issue bonds. And so far, we've seen from the previous analysis, we've seen Zamfara states issued a 7-year bond of 19.8 billion naira through the ZSG SPV. And also we saw Edo State also issue a bond through also an SPV. Is that the way to go? And is that very effective? States going through SPVs to raise bonds because of the challenge of how the market receives them?
I think it's an innovative way to actually access the market. Sometimes when you know that you cannot come to the market directly, maybe because of some contingencies and some restrictions, it gives room for you to actually come in through an SPV and actually access the market. But just that what the market will simply do is that the market will actually check your rating if bear that the SPVs to be very sure that you have the capability to actually pay and also service the loan. And at the same time, your credit rating will also be considered, despite the fact that the fee there's a bill on the real issue of the instrument. But however, you have to actually open the bill to actually see who is behind to actually do your risk analysis very well, so as to know how to actually price such instruments. And also know that okay, your investment safe. For me, it's actually another great way for people to actually raise funds on the market, and thus far, market has actually embraced sort of innovative side of the market.
Very, very, very important. Now let's look at the remainder of the year 2022. What would you say is the outlook for corporate bond issuance in the Nigerian debt capital market? From the pro-share perspective, they expect more bond issuance, of course, second half of the year. And of course, the aggressive hawkish MPR approach of the central bank will continue in a bid to tackle soaring inflation. So looking at the aggressive approach of the CBN in terms of its MPR move, and of course the trend for issuing corporate bonds, what should we expect?
You know, I mentioned earlier on that the best time to issue was the first half of the year, and to be realistic, still remain first half of the year, but there's still room for anybody to still come to the market. And like I mentioned earlier on, it's the fact that a premium has to be paid for you to actually come to the market as we speak. And imagine someone that was in the market in May compared to the person that came to market in August. Mm-hmm. Someone that was in market in May just after maybe before the MPR increase, the person would have still be able to get a good yield, a good price in the market. And now compared to someone that came after the MPR increase in MPR. So it means that the person has to pay a premium. And now look at someone that came post July MPR, means that the person is paying double premium. So now, as we speak, the expectation is that inflationary pressure is still down, is biting, and there's still every tendency that the MPC committee, MPC may still remain hawkish in their state, in their policy direction. And as a result of that, it means that if that is still what is still obtainable, it means that there will still likely be another rate hike in September. So what that simply means is that there's another rate hike. It makes it more expensive for corporate to actually access the market. But one thing about the market is ready to actually take whatever you're bringing to them in as much as it's appropriately priced. What they want is that what are you bringing to the market? Is it appropriately priced in tandem with the current happening in the market? So it simply means that anybody that's coming to the market post September, if there's any rate, it means that anybody that's coming to the market will likely pay double premium. So imagine you coming to the market to raise a 10-year bond, and a 10-year government is already trading maybe around 14% by then. It means that you pay nothing less than 16% for anybody to actually look in your direction to actually do that. And in terms of liquidity, there's a lot of liquidity still coming into the market. In the month of September, we're expecting about 350 billion. In the month of August, we are expecting another 250 billion in form of coupon payment on existing sovereign bonds. So this sort of liquidity can actually help in actually these corporate issuances, but just that they should be ready to actually pay the premium for coming to the marketplace.
Yes, we'll just keep tabs with what happens with MPC, of course, if they're going to raise there'll be a rate hike again. And also, of course, the long tenure bond, like you said, that of LFZ PLC, Lagos Region was 2 decades as 20-year. So we want to see more long tenure bond where institutional investors, particularly for me, like pension market players, can also invest in and see how it supports what corporates are doing. So we want to see more innovation and also watch how the possibility of an rate hike would impact the market. But most importantly, as we approach a pre-election year, we also see how that affects the whole trend. But thank you very much, Mr. Oladipo Ajayi, Head of Fixed Income Desk of Chapel Hill, Denham, for this very interesting conversation. Just know that we'll still engage further to see how the year pans out as it has to do with corporate bonds issuance activities. Thank you once again.
You're welcome.
Thank you. That'll be all for this edition of the Market Review. If you have questions, suggestions on our conversation today, you can send an email to the what is displayed on the screen, the email address displayed on the screen. Also, you can follow our social media platforms that's displayed on the screen. And join our website, www.proshare.co, to read our latest news articles, stories, and reports around the capital market. We have them all captured for you. To our viewers, as part of our work in ProShare to create market intelligence and continue to engage the investing public, we have prepared and are rolling out the 8th edition of our ProShare online trading ranking reports. We have a survey prepared. All you need to do is join our social media platforms and, of course, our website to get further updates on how to participate in that survey. It's very important for all stakeholders in the ecosystem and the markets. And it also helps us to rank how performance is done across the whole ecosystem. Don't forget that you need to be informed to make the right investment decisions. Thank you for watching, and keep discussing the financial and capital markets because they create wealth and economic opportunities.